All right, welcome everybody. So we do this co-stream every Wednesday. We've got Nick Gibbs from Investing Against the Grain. We've got Brian White from Future Aza. We're going to talk stock today. We've got the all-time highs, and the question is it going to continue to jump? Is it going to crash? We've got here the stock as we watch it going. It's 476 right now. And if look at this. It's been seesawing quite a bit today. It fell all the way to 463, went back up to 487. That is a huge change, and then it's fallen again all to 473. Now, of course, this is all relative, right? It's a big jump, but really not really. That is today. And if we take a look in the last 5 days, here we are. What's your thinking, guys, about where we are with the stock? Is it going to pull back, or is it going to keep jumping?
Well, I'll go first because Nick's got way better insights on this than I do. I am a long-term holder. It is all in my retirement. I'm not going to be touching it for a while. The only thing that would make me sell or think about it is if it shifted to just a boring blue chip, just like a dividend stock. Maybe then the growth story is over, but I see a whole lot of room for growth. And if I'm looking to diversify, I always am. I'm looking for robotics companies. I'm looking for AI companies. I'm looking for chip developers, battery companies. Well, I found all of them. They're called Tesla.
Okay, go ahead, Nick.
Yeah, well, let me just interject here with some breaking news. Okay, so the Fed is cutting by a quarter basis point. So that is happening right now as we speak. This is a Fed release where they also have their essentially their predictions for the next few months or next year, what they expect as far as rate cuts. This comes about once a quarter. So what they're predicting now is that in 2025, there will only be 2 rate cuts of 25 basis points. And in 2026, there will only be 2 rate cuts of 25 basis points. So this is actually a huge shift compared to what it was. So it was 4 cuts for 2025. Now it's only 2. So that's a big shift. And right now, it looks like the market, well, when I say the market, I'm looking at Tesla specifically. Tesla's pretty even keel at the moment with all of this. VIX is slightly down. NASDAQ is going back and forth between positive and negative. Same with SPY and same with Dow. So pretty interesting, but everyone's going to be waiting now till 2:30 to hear Jerome Powell's comments, which everyone is expecting or should be expecting hawkish rhetoric to kind of cool down the markets because, as we all know, we have seen signs of inflation flipping back upwards rather than continuous downward trend.
I know you're not Jerome Powell, but my question for you, Nick, would be, how does this fit with what your expectations were and what would your policy be if you were the one in charge of the interest rates?
Yeah, that's interesting. So this is what I expected was going to happen. But if it was me, I would have paused on this one. The reason it seems like, they talk a lot about being data dependent, yet all the data suggests that they should have paused right now. And I believe that the reason they actually made the cut was because the market had essentially priced in a cut. And I don't think they wanted to shock in all of the market, which it would have. It would have very drastically shocked in all of the market in a bad way. So to me, that very clearly says that the Fed is not just data dependent, because literally every single data point we've gotten lately is showing inflation going the wrong way. Not crazy, but we're not at 2 yet. So I think I probably would have paused. Look, the economy is looking like it's doing really good. Retail sales is booming. Stock market's at all-time high. Like growth is happening left and right. Unemployment is still essentially at historic lows. It really doesn't make sense to stimulate the economy more when we're already a juggernaut. So that's kind of my take.
Appreciate it.
Okay, so we have our rate cuts. We will, in about half an hour, we'll go ahead and listen into Jerome Powell as he talks, because like you said, what matters is the words he uses and what his sentiment is. In the meantime, let's go back to Tesla stock. This has just been screaming, going up like crazy in the last several kind of days here. This is where we are today. And so Yeah, what are you guys thinking? Are we gonna, now that you know that there's a rate cut, does that, so far we haven't seen this stock react to that, right? Any impact to that?
I mean, interest rates on cars will be down by a hair, but I don't think that hair is what's moving units.
Yeah, I don't see this as, look, I think I've said this a lot on this channel, but or on this stream. I believe the market is pretty efficient. I don't think there's a lot of slack between bid and ask when it comes to the market. And I think everything that's happening now has already been priced in, right? So this move, the fact that's not shocking it, I think is to be expected. There's a lot of certainty on what was going to happen. The only way the market would have moved would have been if there was no rate cut, or if they did a bigger rate cut. That would have been unexpected. So I don't think this changes anything. If anything, this could lead to this could be the beginning of, for the rest of the year, where we kind of have a cool off in the markets, because this was it. Or after Jerome's done speaking, this is it. There's no other news. There's no other events
Right.
for the rest of the year, until, for Tesla specifically, until 2025. We kind of get several things right away. We get the total deliveries, which could be good, could be bad, depends on how you look at it. And then you get the jobs number right after that. So those could have implications on the stock itself in the short term, but we'll have to see. I do think, just going back to the stock, I have been saying this for a while. I personally believe that we have run too far too fast. Not saying that I don't think that Tesla should be valued at this price, or that they warrant it, because I think they do. But there is something to be said for making a move with solid foundation versus making a move with a hollow foundation. Because if there's any cracks, all of a sudden it can just collapse underneath it. And I don't want that. And that's where I would love to see Tesla just kind of stabilize, just trade sideways for a little bit. I mean, trust me, I want it to go to 2000 tomorrow as much as the next person, but I don't want to go to 2000 just to go right back down to 300 either. Right.
There's a crack in your logic, though, Nick.
Wanna
Huge
bet?
crack in your logic. I like what you're thinking. Of course, that's the logical thing to say. Stock has risen too fast. It's going to pull back, and that's healthy. It's normal. The crack in your logic is the reason why the stock is rising. It's based on large institutions, which you must agree with me. It's
I
more
don't.
institutions than retail. And the way we know that is the volume is very, very high at the very beginning of the market opening, and very, very high at the closing of the market opening. It's more likely big institutional firms buying in for window dressing, for getting in prior to the new year, because the stock has risen up so high, they got caught, they need to put money in. That's the reason it's gone up. Now, if that's the reason it's gone up, you need to tell me that it's dry now. They've all done it already, or they haven't yet. There is $6 trillion sitting on the sidelines on the retail side as well. So that money, it can continue to come in there. So, once somebody sees, we're no longer in the downturn, we're now in the upturn, we better start putting money in. Then they see it go up and hard, they're going to put even more money in. That's the reason why it's gone up. So it's not because, it's the market value of the company is not worth 1.5, it's more about 1.3 trillion. That's not the reason that this is going up.
But, and this is a big but, or as Herbert would call it, a crack. Don't we have a big rebalancing coming up with the funds who may have to trim because they're now
Friday.
overweight?
Tell us about Friday, Dick. Come on, triple witching. Tell me what that means.
Okay, you guys are talking about two different things here. Okay, let's start off. You want to talk about crack? All right, Herbert, you're on crack. Let's walk through this. Let me ask you some very simple questions. Why are institutions buying into Tesla?
Why are they buying into Tesla? Well, certainly not fundamental.
4 words or lower.
They're underweight. They're underweight.
Underweight. Herbert, what do you got?
I can't do it in 4 words, but okay. They're chasing that's the price, the stock price.
Okay, those are hollow reasons for Tesla to go up, and this is my point. It's people aren't buying into Tesla. Some are, sure. I'm not saying an absolute here. Some are, but I am of the opinion that the majority are buying into Tesla because they're buying ahead of a forced rebalancing, as Brian said, because they are trying to do window dressing. And all of these are reasons that come January, February, March,
Yes,
they
it could
say,
sell off.
all right, we just got a quick 50%. Let's get out of here. Let's take our gains and run.
Yep.
Those are hollow reasons. They're not, some are, but I'm of the opinion that the majority of this move is not, and it could be 60-40, but I'm saying more than not that this move is not because people are like, oh my God, FSD 13 is the real thing.
Agreed.
It's
Agreed.
because, oh my goodness, here we go, Robotaxi, watch out Waymo, watch out Uber. This can be the biggest company in the world. The TAM is just insane. I see it finally. I don't think that's what it is. And so we could go to 600. We could go to 1,000. I don't know when it's going to stop. But my point is, I don't think
Yeah.
that we the majority of this run for solid reasons that's going to make us never go back down to, 380, for example. That's my point.
I'm totally on board with everything you said. We're probably saying the same thing then. Yeah.
So
There
that's
are
my
a
saying.
lot of there are a lot of institutional investors who are buy and hold, pension funds and whatnot, that will get into a stock and just stay there because that's their strategy isn't short-term gains but long-term gains. And we've seen, Alexandra has covered this quite a bit, how other big companies have 60-70% institutional holders, where Tesla's at like 30-35%. Those funds are definitely kicking themselves now. They wish they'd gotten in. They wish the credit rating had been updated and upgraded at a more reasonable time, that the S&P inclusion had happened when it should have instead of 2 quarters later. And they, of course, blamed, well, we've got these rules on when we can add something to the S&P 500. No, the rules have exceptions. You've used them before. You just chose not to on this one. And a lot of companies' faith in things like S&P have been eroded as a result.
Yeah. The other thing too, so there's two things happening right now. Okay, so let's talk real quick about the rebalancing. I'm not going to talk about what it is. If you don't know, go look it up. But what I think is very obvious what's happening is people don't rebalance on the day of rebalancing, right? They're trying to get ahead of it. And so to me, what I believe I have seen is funds stepping over each other to try to acquire the needed shares they're going to need to properly balance. And as they see the stock running up, they're all saying, okay, I can't wait. We got to get in now. We got to get in now because it's just going to get bid up way too high for them, or well, higher than what they want to be buying it for. And so come the new year, and then obviously they're fighting people who are window dressing following, the New Year's, come January, February, March. I think that's where we'll see Tesla have the real value that it's going to stay at. Remember, with the highest high you're at, like I always talk about in people's portfolio, if your portfolio hits $1 million on one day and you're like, oh my God, it hit all-time high of $1 million. Okay, you probably don't have $1 million really in your portfolio. It's probably more like 850, right? Like that's probably more of the normal. You're to sit there and look at what the peak is, the peak value at that point, that's kind of nonsense. You're just asking yourself to always be disappointed unless you're at the very peak, you're not happy, or it's not where you expect. And so I think we're like that with Tesla right now. And again, maybe it's not right now. Maybe it'll be at 500, maybe at 600. I don't know. But there's a certain point where we kind of have to normalize a little bit. And I think that's going to come. The other part, this triple windshield hour, I'm someone who, all right. Again, I don't want to go too deep in this. If you guys don't know what these things are, go do your own homework on this. But essentially, triple witching is when normal equity options expire, futures expire, future options expire, and index options expire all on the same day. What this does is it creates a lot of really liquidity is the best way to say it within the market, meaning your bid ask spread is really tight, so you can get what you want, right? You're not really going to be gaming the system there, but it's also very liquid, so you can trade in and out very easily. But they're all expiring then, so this creates a lot of volume on that day. That volume isn't necessarily mean it's going to be bullish or bearish. In fact, historically, triple witching in December is actually very bullish, but the last 3 years it's been very negative. So there's no real correlation to hang your hat on, but that's what's happening there. A lot of these contracts are expiring.
Gotcha. Thank you for explaining that. So do you think that the stock has risen? That's all we can say. We're trying to debate. Did it rise? Some people believe that because it's been so depressed for 3 years, we're just now catching up to where we need to be. Or do you think that we're, like, say, you're kind of hinting here that we're way ahead of where we need to be at this point?
I don't know where the right place is, but there's only so many times you can crank the jack in the box before the clown comes bursting out. And this may be where we're at. That's what we had in 2019, as it had traded sideways for so long. And the analysts were looking at the mud field. Oh, it's just a mud field. Guys, if you looked at that drone footage at all, you could see what was going on. And it was clear that they didn't. And that's when I made the decision to invest, because I'm looking at this saying, how am I the only one who sees this? Turns out I wasn't the only one, but Wall Street definitely missed the boat on that. I think we should expect perhaps a new floor moving forward. There are times when people say, well, I'm just going to sell at this point and then buy back in when it goes down. And sometimes it never goes back down. I saw people doing that years ago, saying, well, it's at, 1,100 a share. I'm going to buy back in when it gets to 8. And they had to choose to either never get back in or get back in much higher, because that 1,100 was pre-split, and that those days are not coming back.
Yeah, I'll echo what Brian said. I think Brian and I see things the same way. I don't know is the answer. And anyone, this is why I don't. I was on with Randy last night, and I kind of was being a little mean to analysts and what they do. In my opinion, they're pointless. They're a waste of resources. They shouldn't exist. I think analysts are just there for clickbait, if anything else, or just to get attention for the given institutions. But to pick a number of where it should, we don't know. We don't know. You have no idea. All right. The market's going to do what the market's going to do. The only thing that I think Brian and I would look at this, and you too, Herbert, would say, is that we see the technology, we see the way technology's trending, where the future is, and the way we see is it's electric cars, it's autonomy. We experience it, we see it, we're like, okay, well, clearly this is where the world's going to go. The price that people are going to pay for that, when they're going to do it, impossible to know. So we might be way too high right now, and we need to pull back to like a 380. At the same time, we might go to 600. And then from 600, maybe at that point, we're like, okay, we need to come back to like 520. I don't know. I have zero idea. But what I know is to run about 100% in 1 month, no matter what company you are, what stock you are, that's a lot. And the only recent example where we see something similar to that is NVIDIA. And if you take NVIDIA and you try to make that story homogenous with Tesla, there's a huge gap in it. And it's that the reason NVIDIA popped the way it did is because they blew out the revenue that was expected by Wall Street. Nobody saw it coming. The revenue was insane. Tesla doesn't have that right now. Tesla has the story. Tesla has you're seeing the flickering of the light of what's about to happen. And I think people are seeing that. We're seeing that. We've seen that for a while now. And it's getting brighter and brighter for us. And as it gets brighter and brighter, more people get drawn to it. And so I think that's what's happening. But I still, again, I think there's a lot of short-term hands in there. They're doing things for not the same reasons why we are in it. They're doing it for other reasons.
Yeah.
And I would agree with that completely. We know why NVIDIA popped. And what we haven't seen from Tesla during this big recent run up is like a new earnings report or a new product unveil or a new licensing agreement, anything like that. One of the factors we had years ago was the Hertz announcement. That was a big deal. That was seen as a real vote of confidence and assurance for deliveries in the future. And what we've seen is just the sentiment shift that maybe there's some optimism for the new administration coming in January. Maybe there's going to be a easier regulatory environment. But in any case, there's going to be, we haven't seen hard numbers to back it up.
I love everything you're saying, both of you guys. So I agree with that, right? We don't know what the price is today. That's why I asked the question, was it because it was depressed in the last 3 years? And then we're just catching up, but really we don't know. Okay, that is absolutely true. The difference is that, go ahead.
We don't know, but I will say that, and it gets even cloudier and grayer because of the timing of FSD 13 coming out
Yeah,
that
that's what I'm
makes it
saying.
cloudier, and the time of year with window dressing and right after election, it makes it really cloudy. If only one of those, it's like imagine if you got sick and all of a sudden you're
Right.
taking all these cocktails of medicines. You're like, I don't know which one actually
Which
did it.
one? Yeah.
Exactly. So it's kind of like that. But I do think that winning the election, for just say the Republican Party winning it, I think it's not just a Tesla story, it's the whole market thing, right? They view this administration as more friendly to business. And when you talk about cutting regulations, right, that means that things can happen faster and quicker. And I think that alone creates this animal spirits in the market, which lifts, tide lifts all boats. So I think we can say that that's a for sure a thing, but anything else, I feel like we're kind of speculating. I would love to say this whole move was purely because everyone saw FSD 13 and they're like,
All
oh
right.
my
That's
God,
not the
it's
case.
real. I would love that because if that was the
That's not
case,
the case.
I'd
Yeah.
be like, we're going to 1,000.
Yeah. Yeah.
But I don't know that. And
Yeah.
I went and
That's
saw the Cybercab. We have it here in Tampa Bay, and there was no line to see it or anything like that, like it was for the Cybertruck. So it just tells me that people still don't know it. And I don't think we'll have that. We haven't had that viral moment yet. We still haven't had that ChatGPT moment for FSD yet. It's coming. It will happen, but it's not here yet.
So, Nick, the other night I got version 13.1 something, and I took it out with the kids and the gang, and we had many wow moments where we literally said, wow. It did so many things it had never done before, and it did very good. It was all amazing. I did have someone complain in the comments on the video, what clickbait? No, watch the video. We said, wow. That's literally what's the content of the video. It's not done, but it closed 90% of my gaps. It fixed this parking at a flashing red light instead of treating it as a stop sign. It fixed the no right on red. The stops, there's no more whiplash. It comes to a stop so smoothly. It will park. It will unpark. Unreliably, I should add it. I've only gotten it to unpark a couple times, but it happened to work on camera. So maybe it was feeling a little bit of stage fright there, but we are very, very close to that. And what I was telling Herbert in a show was that now when I mention FSD and they say, oh, it's this or that, I say, you don't get to talk unless we go for a drive. That's it. Butts in seats, man. If you want to be an expert like you claim to be, saying it won't work, let's go for a ride and we'll see.
All right. Let me summarize everything, because I think everything you're saying, both of you guys are saying, I love. Okay, I agree with. So the stock price has risen significantly. We don't know what it's made off of, but more likely than not, it's FOMO, right? More likely than not, it's just people catching up, trying to jump into the stock price. There are people like us who are waiting for the big events to happen, right? FSD, robotaxi becomes a real product. Eventually in the future, a bot becomes a real product. We know that the market is so big that if you start to calculate even just 10% of that probability that either of those happen, and just 10% of just the conservative estimate of what it is, the stock should be priced where it is now, even be higher, depending on how you want to do this. But we know that the price is the way it is now, not because of earnings. Yeah, it's not. We haven't seen that in earnings, and it's not because of the excitement for these products necessarily. It's for these other reasons. So that's why we should be careful, like you're saying. It came in fast because of FOMO. You can leave fast because of they're just in and out, right? They're not here because it's guaranteed this company's gonna get the earnings. When you look at NVIDIA, Jensen Huang for years has been saying we are an AI company. We've got this chip that's going to revolutionize the world. Everybody's going to buy it. Nobody heard him. And then, of course, it started to pop like crazy once he started showing real earnings every quarter, just beating every quarter. When that happens for Tesla, which is when the robotaxi comes into place and they can actually show that this is real, and then people can start calculating, that's when the real run-up is going to be. I've got this image here that was shared by Darby just now, and he said, take a look at this image because it's February 3rd, 2020, and you can see that the stock was flat, then it jumps up. But maybe you can help, Brian, but that jump happened because of earnings. So it's not the same. It's not the same. This was right, Brian. Go ahead and explain. I mean, Model 3 was almost bankrupt. The company was about to go down. Then they proved that it succeeded, and it's a wildly successful product.
They were lingering in production hell, and when they finally got through it, which is what we're looking at here, we could see it coming. We were hopeful. We saw big rushes at the end of the quarter where owners clubs would volunteer to go out and do new driver orientations. But the other thing that happened in conjunction with this was there was a lot of convertible debts, big multi-billion-dollar debts that Tesla had due. And we can, as the creditor, we can choose to accept payment in stock or cash. And if the stock is below the cash value, we're going to ask for cash. And once it hit that threshold, it was clear that we're not going to have to pay these bills. We're just going to give them some shares. And now we're no longer in a cash crunch situation. And a lot of things changed in that.
Cash flow flipped. And then when they showed cash flow flipped and then positive, earnings are positive, that's when it just blew up.
And then the debts disappeared.
Mm-hmm. And then 3 years ago, when the stock was at its all-time high at the time, that was because people were calling Tesla an earnings machine. They were projecting at that point 50% growth. Then, of course, interest rates came, huge price cuts, and
the competition got back into production. The competition was out. They were not selling gas cars. They were not selling anything because they were not, their supply chain was too weak and their hands were too weak, and they didn't keep their orders when they should have. And they just thought, well, if I cancel the order now, I'm safe because I can always just place the order again. They wound up at the back of the queue, and Tesla was able to sell everything they built, and they were able to build as fast as they could with very few interruptions. So the earnings were very strong. The growth was very strong. And then behind the scenes, we didn't see it because we couldn't see it. There was a shift to, we're going to go robotaxi. So the 50% year over year, we're not trying to sell just cars. We're trying to solve the car problem.
The other crack in your story, Nick, found another one, is the economy and what's going to happen with S&P. So the current projection right now, even somebody like Tom Lee, Fundstrat, is projecting like all-time highs for S&P 500. And it's going to grow at least 6%, 10% next year. And so wherever Tesla goes, wherever that goes, Tesla goes. Now, he did say that it could soften, I think, in the second half of next year. So just be careful about that. That could happen. But if the economies continue to go up, if the stock market is a boom, yes, right? It's like even if you don't have earnings yet, stock could still maintain, could still go up along with everyone else. Then the other crack, I'm finding so many cracks in your story, I can't believe this, is that by the second half of next year, people are going to carry forward what they're going to expect if Tesla really does launch an actual robotaxi program that paid robotaxi rides. They can carry it forward at that point for the 2026. And they're anticipating earnings to finally show up.
Okay, so first of all, your first crack that you had before, we established it wasn't a crack, that you agreed I was right, that it is hollow, that people are in there for not the right reason. Okay.
Well spackled.
These yes. So these imaginary second and third cracks. Let's start with first the S&P 500 you're talking about.
Yes.
So you're Herbert Ong, who thinks for himself. You're telling me you know what the S&P is going to do next year? I bet you, I'll whatever you want, I'll take the other side. You pick whatever you want, I'll take the other side. Guarantee you you're wrong.
All right.
Guarantee you're wrong. You know why? Because you don't know. I don't know. So to say it's going to do something is an inaccurate statement. We don't know what it's going to do. We have no idea. So we can't lead with that. We don't know, so we can't lead with that when it comes to trying to make a comparison to what Tesla stock's going to do or whatever. There's many years where the S&P 500 has gone up and Tesla didn't. That's happened before. So to use that, it's not a crack. It's just saying something that's kind of a fallacy, in my opinion. Then the other one, the pulling forward, I would say that everybody in the Tesla community has been wrong this entire time, myself included, about when Wall Street, when people will start to recognize and start to actually price in FSD or Optimus or autonomy or electric vehicles, right? Was it when the competition that actually starts to die off? Well, now we see Nissan and was it Honda or Hyundai, whoever merging. We see Volkswagen CEO ousted. We see Stellantis CEO leaving. We see GM essentially a dissolving Cruise. We see all these things happening, and yet still it hasn't happened. We've had FSD, right? Remember, it was when the NAG goes away, this is going to be it. Okay, well, when actual Super Smart Summit comes out, that's when it's going to be it. We've been wrong all along. So the point is not saying it's not going to happen. So we don't know when it's going to happen. It may not happen when we actually have FSD rides out there. It may not happen. It may not be until we have, look at the iPhone. When the iPhone came out, it didn't happen once the iPhone got out there. It took a long time. So you have to have your own thesis of when things are going to happen. But I think to say anything with a certainty is just leading people down the wrong alley. So those aren't cracks. Those are what you think is going to happen, not what's going to happen.
Well,
okay, so they're not cracks. We're on the same page. Good.
What is more likely associated with stock price is earnings. All right. If the earnings keep rising, then more likely than not, the stock follows that. I studied and I looked at every single milestone that has ever happened for Tesla, and no milestone, no Elon tweet moves the stock more than a day or two. The thing that moves it consistently is growth of the company. You have a company that is growing and showing that it's leading in the space.
But hold on, because you're going to say three other things. Nuance matters. It's not just growth; it's how much is the growth. We can grow an extra
anticipating
3%,
what's happening in the future. Mm-hmm.
No one's going to like that. They'll sell off.
Yeah.
There's many a company. Look at Nvidia right now. Nvidia is literally in the middle of a correction right now, and their growth has been unprecedented. So it's not just growth; it's growth. How fast it's growing? Are people adopting what you're doing? Have we already seen all the growth? Is the end of it? There's a lot to it.
Totally agree with you. But the reason why it matters for Tesla is that the two big markets, they could both fail. They don't, I'm not saying they'll succeed, but they're the largest markets that you can possibly imagine, right? Three of them: energy, robotaxi, bots. And so if they show any kind of, and we're just at the very, very beginning of this. So if they show that they're starting to work on it, then people go, okay, the growth will be multiple years. I'm going to get in now, and that stock will go. If they show earnings, actual earnings coming in, right? I'm just saying to you that once actual earnings happen. So that's the difference between what's happened in the past, which is all these things milestones have happened. We think the stock, I don't call them catalysts. These are not stock catalysts. They're milestones, but the only real milestone is earnings. And so what we're getting every month that goes by, we're getting closer and closer for the possibility of robotaxi earnings and eventually even bot earnings. Maybe 2 years from now, 3 years from now, we'll see it land in the actual bottom line of the balance sheet and income statements. And that's when people will go, okay, right? But we're getting closer and closer to that's my point. So yeah.
So it's
yeah. Do we want to watch the federal, John?
You guys keep talking. I'm listening. I can let you know.
You're listening to that?
Comes up.
Is he on yet? Not yet, because I'm following it right now.
He's nodding yes.
He's on. You guys keep talking. I'll let you know if something comes up.
Okay. So Herbert, what's new with you, man?
Hold on. I'm going to go ahead and play him. Mm-hmm.
Are you?
I am.
As a reminder, this is a co-stream on all three channels. Subscribe to Nick, subscribe to Herbert, subscribe to me. We all provide different insights and valuable
in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2 projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Okay, so what did you think, guys? It was a dovish, but pretty neutral. When he kept sniffing, I thought he was crying, but poor guy, not feeling good.
I don't know what. To me, it always sounds like the most neutral language humanly possible. He said their policy stance is less restrictive. I don't know what that means. What does that even mean? Does anyone know? So I don't know. What do you guys think?
Sorry, I was listening to. So normally you'll get the hawkishness or not hawkishness during the Q&A that's happening right now. So that's when you'll actually see. Yeah, I agree with you. The prepared statements are kind of annoying. I could almost write them for you. It's pretty. They're trying to thread the needle constantly. So I think it's pretty benign. But it is interesting that now, the last couple meetings they weren't talking about potentially slowing down rate cuts, and now it was the first time he actually said it. So I would say that there is a touch of hawkishness in there, but really it's in the Q&A that you'll hear it or won't hear it.
No, we can listen to the Q&A then. Let's listen a little bit to it, see what they say says.
Questions?
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year.
Side risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of now 2 cuts next year compared to 4 in September.
Okay, let's go. What did you think, Nick?
I think they're going to get more and more questions where he's going to kind of peel the onion back more and more. Where, I mean, you heard it there. They think inflation still have a hold of it. They still got their hands around it, but it's still going the wrong way right now, right? It's not going the direction they want. So it's not out of hand. They think they still have a hold on it, but you're not going to see any more rate cuts. You will not see any more rate cuts until you see better numbers with CPI, with PPI, with PCE. Until you see those numbers get better, you will not see another rate cut.
So I did want to address something that I imagine may come up, which is if he didn't know the questions in advance, how does he have prepared answers?
Yeah, he knows. Yeah.
And he doesn't have the questions. He knows what the questions will be. If I had asked Nick an hour ago to tell me, here's the rate cut, tell me what he's going to say, I think Nick could have written out that script that Jay Powell just read. And then I'd say, also, can you predict the follow-up questions? And it was the ones we had. So he doesn't have to know the questions in advance to know the questions in advance.
Well said. Yeah, I mean, these questions they're asking, bless you, or is that cough? Bless you anyways, you need it. I think these questions, he knows what they're going to be, and it's going to be, you're going to hear that same question probably from 4 different people, bless you again, in 3 different ways to try to pinpoint him on. So you're essentially saying no rate cuts until you see inflation meaningfully moving lower. And the other thing he said there is they've made great strides to get closer to neutral. And what that means, so restrictive, I mean, I'm assuming everyone knows this stuff. So let me know if you think I'm being overly I don't want to say pedantic, but so Right now, we're restrictive, meaning rates are higher to force the economy to slow down intentionally. Neutral would be, I'm not trying to boost the economy. I'm not trying to slow the economy. I'm just happy where it's at. Everything's humming along just as we want. And so what he's saying is that we're a lot closer to neutral than what we were. And what I'm hearing really is that we could be at neutral or just off of neutral. It's kind of how I heard it without him wanting to say that, because if he said that, that would be an issue for the markets.
That's what I heard.
You're on mute. Yeah. I literally I muted myself and I said to Herbert, "You're on mute," while I was muted. That's a first for me.
I heard you. I heard you say that. And I'm following the stock right now, and it did not really move much after listening to Powell speaking.
Are we looking at the same stock? We're down $12.
No, I mean not based on him talking. So.
Oh well, he's not done talking either. Oh, you now 13.
I know this is I compared it to my Robinhood, which is more real time, and it's still this is pretty accurate.
Yeah,
So,
why are you getting a Weeble? Look at this dated looking Google.
I'm showing 465.90, but
yeah.
So,
what do you guys think though? What's gonna so this happened. He cut the rates, but then he's being a little neutral, maybe a bit more dovish about what's gonna happen next year. Says interest rates might go up. Does that matter to Tesla?
Not much, I don't think. I don't think Tesla's not a debt heavy company, so it doesn't change anything on the back end. And they're not, again, if buyers can enjoy part of a 0.25% reduction in their auto loan, it's not that big of a change to the monthly payment. We're talking a couple dollars, probably, certainly less than 20. So I don't think that that's going to move it all that much.
Yeah. On that front, I agree with Brian, but I would say you can't look at any of these things in a vacuum. And when I say that, is look, a car is a big expense for anybody. No matter how much money you have, like it's probably gonna be the second most expensive thing you buy in your lifetime besides your house, right? Or some, eventually when we're all Tesla billionaires, our jets, but we're not there yet. But it matters because it's not so much about does it affect Tesla directly or somebody able to or the price of a vehicle or what someone has to pay monthly for that vehicle. It's more of everything in totality. So if rates stay higher for longer, if unemployment continues to go up, if we see inflation tick up more, people only have so much money to spend each month. There's only so much you have, and you've got to allocate those dollars. And if all of a sudden groceries are taking a little more, if all of a sudden your electric bill is taking a little more, if all of a sudden your home insurance is taking a little more, right? All these things, then it can change the calculus for can you buy a new vehicle? Can you go and do X, Y, Z? And so in that sense, it will affect, right? It also affects people's purchasing ability, right? Because maybe they can't take on that much debt because of the debt they already have, right? We see record high credit card debt. So I don't think it's a direct influence on Tesla in a vacuum, but in totality, like people don't have their lives in vacuums like that. It's about how much do I have to spend on all the things I need to spend? And can I spend it on a vehicle? Now, this is where I think robotaxi autonomous vehicles flip the script, because all of a sudden, can I get rid of my biggest expense that's not my home or cut that in half with autonomy? Do I not have to own a car? And that to me is why FSD and autonomy is like the holy grail before Optimus, is because all of a sudden we change that narrative. All of a sudden I don't have to worry about maintenance. I don't have to worry about my loan payment, my insurance payment, whatever. I can just have half the cost of all of that would have been. And that means I get to keep more money, and Tesla becomes the biggest company in the world while I also get to save on my costs. I mean, that's a win-win-win, and less people die.
Oh, fantastic explanation, Nick. Thank you for doing that. All
and
right, so
Brian.
Of course, but you were just the one last speaking there. So, getting back to short term, none of us do short term predictions. We don't know what's going to happen. What I understand, though, is every single day, the stock for the last week or two longer, it pops up on the last hour. Here we are at 12, 10 minutes to 12 Pacific, and it's going to pop up for the last hour. If it does that, people are saying that if it continues to do that, then that means that this buying by institutionals to catch up and to stabilize their, or to get the stock in their business hasn't ended yet. So we'll see if that happens today or if it continues to fall today. Nick, several months ago, you stood up and said that by October 31st, stock would be 350, and you called it right. And then
No, it was way higher than that. He got it wrong.
No, it was October 31st because it only started popping past 350 after November 5th.
Fair.
I think he was close. So what do you think is are you going to make another one of these kind of things in the next 3 months?
I think next 3 months will be around the same level. I don't know.
Yeah.
What about March 14th at 1:14 p.m.?
Oh, that's between you and me, Brian.
Fair.
Or are you talking about the stock price?
Oh no. Oh,
all right,
no.
all right. Let's not do that then. That's fine.
No, I mean, no. Honestly, I think January, February, March will be kind of a low period for the markets in general. I think it'll be kind of a settling out. Again, who knows? I got dumb lucky on that other one. But I think we'll see kind of a lull in the markets, like things settling out. And again, this is, if you just look historically, the stock market from January to, like, I don't know, July, August tends to be like, if you only ever bought and sold stocks based on those halves of the year, you would outperform the markets, which is kind of funny, right? If you sold everything and didn't buy anything from like January to like July, and then come July you bought and you sold again in January, like, it's amazing what your returns could be. So those just tend to be softer months for the markets. But who knows? I mean, who knows?
Okay.
What I would like to see, how about we say that? What I would like to see is I would love to see us create like a nice stable zone between, say, 380 and 500 from now to like March, April, or until they announce the new vehicles, whatever. Let's just create a solid foundation of buyers in that level, so that should we run up, we have a nice place to recoup and have buyers step back in, right? There's a real thing with liquidity when it comes to that. That's what I would like to see. But we could be at 1,000, we could be at 380.
So it's all fun. I get that. But I just wanted to mention that the two of the retail analysts that I've interviewed recently, it's Brian Wang, and then we've got AJ, right? Both of them are saying that they expect the stock to be past $500 by January, February. And the reason is because not only they don't care about the production delivery that's going to come out January 2nd or 3rd, but there's going to be the inauguration in mid-January. There's going to be the earnings. That's going to be reported something around 20th of January. And they're expecting that those two could and should keep the stock at the 500 mark. I think that people are expecting a surprise, possibly for margins improvement in January 20th. And that's what they're counting on.
Inauguration.
Yeah.
Oh, go. You go.
Well, I was going to ask you, Nick, why is it so quiet in Q1 and 2 generally? I mean, I know automotive sales are historically seasonally low for Q1, but we're talking about other stocks as well. I mean, is there a holiday hangover and then it just kind of endures? How does that work?
I mean, I think it's different for every industry, but I'm in the tech space, so I'll tell you, in tech, that first quarter tends to be where companies are starting to make their plans for that year, what the spending is going to be. Sales teams are working on account plans and strategizing, and they're getting new quotas, and right, everything is starting up for that year in that first quarter. So it's kind of like, it's like the preseason before the actual season starts, and that's kind of what you have there. So it's the time to regroup, right? no one's going to do that in Q4 because Q4 it's the Super Bowl for the markets, right? Or for companies, right? You'll see a lot of companies that they'll have their best deals, they'll get the best discounts, whatever, in Q4 to finish off the year strong. But then that first quarter, things chill out, and that first quarter is about regrouping, re-strategizing. That's where you'll see a lot of companies restructure on how they do things, right? Maybe they had their healthcare and life sciences part of a commercial enterprise team, and now it's part of the public sector team, right? They'll make all these different changes during that time as well. So that's the time where all this happens. Tesla is a perfect example in a more industrial aspect. That's where you see a lot of the retooling happening. That's where we'll take plants down and do the retooling. All that kind of stuff for most companies happens in that first quarter. And I think that's why.
Very interesting.
You got to have a quarter, right? You got to have a quarter where you do these things. And that's the one that makes the most sense. You're coming right off the back of a very strong Q4.
And how do you think the stock reaction to the Fed cut today fits? Did you expect it to do this, which is very slightly down, not a huge move?
I don't know. I think Tesla's actually making a pretty decent move right now. It's down 3.5%. I mean, I get it. It's only 3.5%, but compared to the last 2 months, that's a pretty big move. That's the biggest move we've seen to the downside.
Well, it's really only 2% since Jerome Powell talked. But
is he done?
Yeah.
Or is he still? No, he's still up there.
That guy, who knows?
Yeah, I don't know. But yeah, I think, yeah, I mean, we'll see what happens. Like I get this whole. Everybody wants to say 500, and to be honest, that's not much of a call when we're spitting distance away. It's not much of a call. You're telling me, oh, next month it's gonna be 500 when we're 1.5% away from that. Like, that's not a call. Like, it's just not. It's I don't know. But if that's what people are saying, I'll take the other side of it.
Yeah. No, I mean, yeah, nobody knows.
Yeah.
People are all just sitting here. Yeah.
Wall Street guys make a whole career out of that. I see people when the stock is at 460 saying we have a price target of 500, but don't buy it. And it's like, well, if you think it's worth 500, then why wouldn't you buy it at 460? I don't understand.
Yeah.
And neither do they, because it's all astrology.
I'll say something else too. Keep an eye on VIX. VIX is popping. It's up to 17. Yeah. We were at 12. We were at 12 for a while. And this is exactly what I said last week on here. I've said on Randy's channel. This is when you know we're kind of at a top in the market. Normally is when VIX is really low. Everybody is saying that everything is going to the moon. Everything's bullish. We saw crypto at all-time high. We see Tesla running. We have Roaring Kitty coming out making statements. For Christ's sake, Doge, not what Vivek and Elon are doing. Doge, the crypto, had a bigger market cap than Schlumberger. Just think about that. Like, if that's not saying frothy, I don't know what does. But the VIX tells the story, and so when the VIX is that low, hang on to your seats, because the VIX isn't going to stay that low. It's going to come up, and as you see, we've gone from 12 to 17.
Now, I know you're talking about the volatility index, but I can't help but think the reason you've said the word VIX 6 times in this show is because of the Vapo Rub. You got the Vapo Rub on the brain.
I could use some, man, but only if applied by the future Ozza King himself.
Oh, wow. Hey.
But awesome. That's March 14th at 1:30, was it?
That's right. Hey, 1:14.
Well, you guys predicted well. Thank you guys very much. Stay on the channel. Brian will answer all the questions that are on the Q&A. And he'll talk about his experience with FSD as well. Thanks, everybody. See you next week. All right. No, we're not doing it next week. Christmas.